Hey guys, I'm going to chat to you about timing the market, making sure that you get it right and you don't get left with a bad asset and the market's dropped by 20%. Now, we've seen some massive growth over the last 12 months, especially for pretty much every property market, but especially the regionals or the coastal towns. Now, that's very not typical. So what normally happens is the cities, the more metropolitan areas, they'll grow faster than the regionals typically, and the regionals normally will follow. But what's happened over the last 12 or 24 months is COVID has obviously accelerated the growth in the regional areas, and some of those areas are now coming off the boil. So people have gone in and paid too much, and now the market's cooling and it's slowing down. There's more properties that are coming to market, and then obviously there's less buyers because everyone has already bought. Now, that's not the same all around Australia. There's different parts, different pockets. There are some regional places that are still growing in value and they'll still have a good 12 months to run, but there are some that have already passed their use by date, so to speak. So just keep in mind, in a regional market, you've got generally limited buyers and that market has limited stock, maybe not so much limited stock, but if the population, say, only 50,000 people or less, then there's only so many houses that already exist, and that market can be very easily oversupplied. So if you go and do one development, or somebody like myself goes and does one development with a few hundred homes, that could easily oversupply a regional market in one area. So just keep that in mind. If there are developments happening in regional areas, they can quite easily oversupply those markets. So the timing for development, especially of that size, might be 2 or 3 years. So if you have a look at 2 or 3 years down the track in where you're investing, and have a look at those developments and where they're currently sitting. So if you've got a site that you own or a property that you own and they're going and developing 500 blocks of land over the next 6 or 12 months, we can kind of get a bit of an insight into the future, in that once those blocks start to come to market, maybe at the very start they may not oversupply, but I can guarantee you, if a regional market is getting 500 or 1,000 blocks to market over the next 12 months or a bit longer, that market is going to be fully saturated and every property in that market will be devalued. I've seen it many times. I've been in a market where I bought at almost the peak of a sub-market in a regional town. I still own that particular property. It's a development site. I've been holding it for about 6 years, and that market has peaked. It's in a regional market. There's 100,000+ people. But when that market came off the boil, property values went down by 30% in about a 6-month period. So as quickly as the market's gone up, it can easily come back just as fast. Now, metropolitan, so city areas, they have a fair bit more stability than this. If a metropolitan area goes up by 30%, chances are it's not going to come back by 30%. I put aside luxury homes over GFC, and then in 2012, 2013, or up to that point, and then in some sub-markets, luxury homes, I saw halve in value. So especially, a lot of people might know the Gold Coast market. I witnessed many luxury homes selling for half price or less than what they did prior. So this is back in 2009, 2010, 2011. Luxury homes were selling for a fraction of what they did back when people had paid or bought them in 2006, 2007 at the peak of the market. So luxury properties really take a hit. So timing the market is really impeccable. Keep an eye on forecasts. There's particular forecasting companies that I use. I don't claim to be an expert in timing the market right, but I do know some telltale signs for markets and sub-markets. And I think some markets at the moment have overshot the mark, whereas some other markets, there's still plenty of room to move into 2022. And there's plenty of markets within Southeast Queensland that are still going to move. They might even get 20 or 30% gains next year. And I'd like to think I'm in at least a couple of those markets. But if you'd like to know more, please let me know. Leave a comment. Would love to hear from you. Thanks for watching. Have a great one.